Hi there, welcome to Kneppy Invest and welcome to another answer and reply video. This is where I go through your comments and either answer any questions you have or just reply to something you might have said. I might not go through every single comment because I don't really want to do an hour and a half video, but I will talk about as many companies as possible. So let's go back a week ago, and 6 days ago, Todd7819 said, I found this company and bought it too. He's talking about a company called Supply Network, ticker SNL. Absolutely a high quality company that's founder led. Now, when you look at the chart for this company, would you disagree? This company's chart is or has the telltale signs of a high quality company. This is the daily chart right now. Beautiful uptrend. Even if you look at the weekly chart, exactly what you want to see. Share price moving from the bottom left to the top right. Share price has accelerated in an upwards trend since COVID-19. So back then, the share price was around $4. Now it's $19.90. And you can even say in the last, well, since the start of the financial year, actually the calendar year, not the financial year, the share price has even accelerated even more. I would like to see a little bit of a pullback. That's me being a little bit greedy. Now, there was a little bit of a buying opportunity on the 24th of January. Share price on that particular day fell 5.8%. I saw it and went, oh, this could be a time to buy some shares in this company. And the share price rallied immediately after that. So that was the opportunity that I missed. So that's the sort of thing I'd be looking for now for Supply Network. So about $20, yeah. It's just come off $20. So that's the share price high for this company. There's no reason, if you're a share of this company, there's absolutely no reason you'd even be thinking about selling shares in Supply Network. It's a high quality company, growing. Yeah, nothing bad I could say about this company. Chart looks brilliant. Company looks brilliant. Yeah, so congratulations to anyone who's bought some shares in Supply Network over the past 10 years or so. Vin Hilly asks about why I sold out of Elders. 2 broker upgrades this week. I don't actually care about broker upgrades or downgrades. In fact, I completely ignore brokers. El Nino has been declared and cattle prices have hit a floor. But you notice in that announcement they did release this profit downgrade, they went on about 5 reasons why their performance was not as good as expected. And that's the problem with this type of company. It's an agricultural company, and the problems they have no control over. Weather is a problem. They can't control weather, and there's other factors as well that will influence Elders' performance. So that's the reason why I don't really like agricultural companies, because no matter what management do, sometimes the performance of the company is out of their control. And that is one of the reasons I actually did sell out of Elders as a trading position. I would never own this company for a long-term position. And the share price has bounced. And I think it's bounced just based off those broker upgrades. But this is the weekly chart. And you can see, actually, the daily chart. And you can see if you go back and have a look at the weekly chart, it's all over the place. Share price of this company is just all over the place. In fact, it was in a nice uptrend from about 2014 through to 2022, and then just fell off a cliff during 2023. Maybe there's something to do with El Nino. I don't know. But even if you look at the daily chart right now, a little bit of weakness, a nice little rebound after that bad news. But the share price was in an uptrend. That's why I was trading it. And that uptrend has come to an end. And that's why I sold. Small profit, but still, it's a profit, even though it's smaller than what I could have had. And in fact, before that announcement, the share price was looking really good. Share price had got to a multi-year high, and the market just got it wrong. Okay, so that's Elders. And when it comes to trading, I listen to my rules, follow my rules, and that way I take the emotion out of it. So I'm would never own Elders for the long term. That's just me. Can you look at Novonix in the latest announcement regarding creating new company, please? Really? No idea. I don't follow Novonix at all. So they're creating a new company. Well, they haven't even got a company in itself right now. And when I say that, I mean um, they have revenue that's really small, really tiny. So they have to create their own first company first to create a new company. Maybe I'm being a little bit unfair. I'm just going back to the annual report just to see how much revenue they did have. It's probably all the way down the bottom here somewhere. Shares under options somewhere here. There we go. So revenue in the last financial year, $8 million and a loss of $46 million. So yeah, I have no idea what they're doing. Let's have a look. Merger and IPO spin out of LEL and Novonix natural graphite assets. I have no opinion of this at all. Why are they doing it? Do they see no value in this? Why are they spinning out? I'm always skeptical when a company spins out something else. Not always for bad reasons they spin it out, but I'm just wondering why they're spinning it out. Maybe they see some better value if they merge with this other entity. Let's have a look at what this other company is. LEL, probably a lithium company, I'm assuming. I'm assuming one of the L's in LEL is lithium. Let's have a look. Where is it? Lithium Energy Limited is entered into agreement with Novonix to acquire its high-grade graphite deposit. Okay. Lithium Energy and Novonix will spin out the consolidated graphite assets via initial public offering by Axon Graphite Limited. The way I would look at this is as an IPO, and I would never put my money into an IPO that is not generating revenue, and even an IPO that where the company is generating revenue. I would wait at least 6 months just to see how the company is performing, unless the company releases a profit upgrade. So I would view this merger as an IPO, and more than likely, it's not going to be revenue producing. I'm assuming this is just an exploring company at this point in time, and they're not yet into production. If they are into production, then why are they spinning it off? I have no idea. So I have no opinion on Novonix at all and this new company. Shelley says, I think people viewing your videos all like them. The thumbs down button is too close. I don't know. We're all different. We're all different. Those few that have given thumbs down might need Specsavers or have fat fingers. We're all different. We like different things. And maybe someone who's come across my videos just don't like that I'm completely different than how they invest. Who knows? Everyone's different. And that makes what makes the market, which is awesome. Oooh Media looks like breaking out. What do you think? From a nice, quite a few comments from nice. Thank you, nice. So let's have a look at Oooh Media, OML. We'll have a look at the daily and weekly chart. You get a different perspective. So daily chart, it did look good on the 21st of February. That was a potential breakout. Share price has struggled since then and is just gradually grinding down. You could possibly consider this as a little bit of a dip, but I would prefer this dip not to be quite as long. This is over a month long dip. So daily chart looks okay. Weekly chart, yeah, I can sort of see what you might be saying just by looking at the weekly chart. I probably would prefer the share price to get above about $1.95. We'll just say $2 because share price of Oooh Media really struggled to get above that level in between 2020 and 2022. You can see it get to that level about 3 times and then pulled back, and it's moving towards that right now. And yeah, I can see it. It is trying to move in the right direction. So yeah, it's starting to look okay, just a weekly chart. But I'd be fairly bullish on this company if it moved above $2 on strength, particularly if the company released some really good financial news. The other thing I like to look at is volume. And we did see a little bit of volume when the company did break out above about $1.72. The volume has been pulling back recently, which actually is not a bad sign. As the share price sort of retreats, the volume has been decreasing. So not necessarily a bad sign. But it's starting to look good. I wouldn't necessarily say it's breaking out just yet, but possibly soon. Love your exploration on Codan. Many thanks. You're welcome. You're welcome. Thanks for the video, mate. You're welcome. Lots of interesting stocks today. Great content as always. Thank you. Okay. I won't go through all these comments. I'm looking for, thoughts on Uni, which is Universal Stores. Is it Universal Stores or Universal Brands? I always forget. I think it's Universal Stores. So I missed this one. I have talked about this one a few times in the last few weeks, and I completely missed this one. The breakout happened when the company released their results on the 22nd of February. Share price then went sideways the next 5 trading days. That was the time to get in, around about $4. Well, we'll say between 450 and 460, and share price has taken off up to 565 now. Last couple of days has been a little bit of a pullback, and we haven't seen much of a pullback. We did see a little bit of pullback at the start of March. Share price went back down to $4.60 and then started on its upward trajectory. So, to be honest with you, a nice looking chart for Universal Stores. However, once you look at the weekly chart, there was a high back in the start of 2023 at about $6, and share price actually did pull off $6 recently. It would have been on Wednesday. Share price got to a high of $5.95. So there is a little bit of resistance. We'll say between about $5.80 and $6. We'll even say $6.20. So that is in a resistance zone, and share price has pulled back. So, and that's because of those highs we saw at the start of 2023. Still well off its all-time highs back in 2021. But the daily chart looks good. The weekly chart looks good. Some really good volume coming in. You can see that weekly volume late February into early March. That's a good sign that institutions are building position in Universal Store. So just based on the chart, looks good. I'd say even the fundamentals probably are okay. P ratio 16.6. Probably would prefer that to be a little bit lower. Dividend yield 4.3. Yeah, so nothing much to complain about Universal Stores right now. Daily chart looks pretty good. Just a little bit of resistance just above where it is right now. Little bit, not a lot. What do you think about Argo Investment trading below NAV? Thank you, KAU Malos. Oh, yeah. Argo Investments. I'm not the biggest fan of these type of companies. I like fund managers. I do invest in a couple of LICs, but not a biggest fan of fund managers. So let's have a look at the monthly NTA and investment update. And I will say also, I'm not the biggest fan of this fund manager because they're very much like an ETF. And in this announcement, I'm pretty sure they'll show you their biggest holdings. We'll also have a look at the NTA. And they also should have a post-tax NTA. That's a big difference because you always have to take tax in consideration because capital gains is a real thing for not only us, individual investors, but also for these fund managers. So if you hold a company that has risen a fair bit over the past year, less than a year, then you might have to pay capital gains on that. It's taken so long to open up. So this is Argo Investments. So top 20 investments, it's just like an ETF. Macquarie Group, PHP, CSL, CBA, Wesfarmers, Rio Tinto, ANZ, Westpac. We're talking about the biggest companies on the ASX. Santos, NAB, Telstra, QBE Insurance, all the biggest companies on the ASX. They've got Technology One there. So a few companies I like. Top 20 equity investments account for 61.5% of the total portfolio. And here's the NTA. Nice little increase over the past month, up to 966. But NTA per share after unrealized tax provision, they do have a little number there. As required under the ASX listing rules, theoretical NTA per share after providing for estimated tax on unrealized gains or losses, sort of like the capital gains in a portfolio. That is after tax that may arise if the entire portfolio was sold. So that's the real NTA that I look at, not the NTA per share. I look at NTA per share after unrealized tax provision because if the management decided to wind up the company right now, that's the real value of the portfolio. $8.37, not $9.66. There is a big difference between the two, and the share price is $8.70. So maybe not under NTA the way I look at it. So I'm not sure if that's what the professionals do, but that's what I do. So let's have a look at the chart for Argo. I'm pretty sure this is not a good looking chart, to be honest with you. It looked like it was trying to break out back in late January, early February. It looked like it was trying. There was a nice little resistance level there and it got above it, but then fell back, probably on the release of their results, and has moved into a short-term downtrend. So not the best looking chart. And if we look at the weekly chart, I'm pretty sure this is doing nothing, just going sideways. Going sideways. You can say over the long term it is going up. So this is going all the way back to now 2012. So back in 2012, share price was 560. Now it's 870. So I look for better returns than that. Share price hasn't even doubled in the past 10 years. You might have seen some good dividend. Dividend yield 3.97%. Funny enough, in TradingView, they have a discount premium to NAV, and it's blank here. I didn't realize that they might do different stats for different types of companies. That's interesting in itself. Okay, so yeah, not for me, but yeah, have a look at it. Thanks for the timestamps, if it's for you. Not for me, but if you like the company, yeah, I'm just sharing ideas. Just because I might not like an idea doesn't mean the company can't be for you. Thanks for the timestamps. You're welcome. Okay, hi Kneppy. Thanks so much for the videos. I'm learning to improve as an investor. I was wondering what your thoughts are on DBI. That's Dalrymple Infrastructure, if I remember correctly. I could be completely wrong. As a dividend stock and things to consider, I think they have a unique model with contracts that increase by a percentage each year and have contracts until, I'm assuming that's contracts, until 2030. All right, so again, this is sort of an infrastructure play, Dalrymple. Yeah, Dalrymple Bay Infrastructure. Well, it's got it in the name, infrastructure. This is more of an infrastructure play, and I'm not the biggest fans of infrastructure. I still believe they're bond proxy companies, and also dividend yield. So what's the dividend yield for Dalrymple? 8.67%. Yeah, that's pretty nice dividend yield. PE ratio, probably not as relevant. 18.65. Share price actually done really nicely over the past year and a half. So there was a nice little breakout on the 11th of October 2022. So let's have a look at that. So on that particular day, share price rallied 6.2%. So that could have been the AGM. I don't know. And that was the time to maybe think about buying this company. And even though the share price has continued to rise, I would say this sort of company, the share price would just grind slowly higher over time. So share price has increased from about $2.30 to current share price of $2.75. So it's really done nothing all that much, which I'd say this is fairly normal for an infrastructure company. Now, one of the reasons why a company like this might be favoured is because a lot of infrastructure type companies like Sydney Airport have been taken over. So there's not many of these type of companies on the ASX. So that could be attractive. But really, the dividend yield looks pretty nice. I would say the dividend yield wouldn't decrease or change all that much through time for this company. So a stable defensive stock company, if that's your thing, yeah, I'd say go for it if that's your thing. You've obviously done your research on it because you've got some interesting, unique model with contracts that increase by a percentage each year and have contracts until 2030. I think if you're comfortable with your research, then yeah, take a position on it without doubt. Nice dividend yield. And the thing about dividend yield of 8.7%, if they don't decrease the dividend yield, you don't need much of a capital gain to get a good return from that company. Okay, Raven. Interesting comment here, talking about bigger picture for China, and many countries might be population demographics or that one-child policy for China, which they got rid of, by the way. Why does Nigeria shoot up to 4th in population by 2040? Watch the shorts. Capitalism is about selling a product or service. So yeah, population demographics is going to be really interesting over the next 20 years. And eventually we're going to see the population of this world fall because we don't want babies anymore. Many people just don't want babies. It just costs too much money. We have 8 billion people in the world. We just don't need babies. And we have seen at this point in time, if you look at the population growth, the natural population growth, well, not population growth, but birth rates. That's probably the important thing. Birth rates throughout most of the world, apart from Africa, is below 2.1. Some countries, it's like 1 or 2 or less than 2. 1.2, 1.1. China is really low. Australia is okay, but still lower than what we want. The last time I looked at it, they separated the birth rates into different geographic regions. So every single geographic region, even Oceania, which was I think 2, every geographic region apart from Africa was below 2.1, which is a replacement number, as I've mentioned. And I think with education, increased education in Africa, increased health awareness, eventually the birth rates in Africa will fall below 2.1. And at that point, we're going to see population decrease. The biggest problem with the population demographics is the aging population in Western countries and not enough young people being born to take over the jobs. So instead of not having enough jobs for all the people, there's a possibility we won't have enough people for all the jobs. And that's where automation becomes really important in the future. That's why AI is really important. Automation is really important. That's why governments around the world are trying to put more money or want more money invested in automation, AI, also anti-aging. A lot of money is being poured into anti-aging because eventually they'll want us to work longer. You don't be surprised to see the retirement age increasing to say 70, 75 because of the aging population and increased health. I won't say they will reverse the aging, but that's happening. A lot of research is being done in that. And that's why it's very important to become financially literate and become financially aware. And most people watching this video know that. And the governments around the world don't do that because they want the people of the world to be financially illiterate because they can control them and keep them in the workforce for longer over time. Okay. Hi, enjoy your video. What is a safe app to trade international and ASX? By your video, you're in Brisbane. I'm over the gap in Warwick. Well, right near me is a suburb called the Gap. Okay, so you had me confused there for a millisecond. Warwick, yeah. Safe app. I don't use any app. Well, so I trade via all my international. Well, I trade most of my international companies via Net Wealth, which is my super. But I also trade now Superhero. So I use Superhero, Self Wealth, and Net Wealth. How do you define safe? I think all those are safe, relatively safe, in my opinion. Some people don't like Superhero because technically you don't own the companies, but that's as it is. That's how as it is in the United States. It's the broker that owns the companies, and you just sort of I don't know how you describe it, but you technically own the companies in Australia, but not technically own your companies in the United States. So I'm not sure what you define as safe, but that's what I use, and I'm comfortable with using Superhero and Self Wealth and Net Wealth. Although Net Wealth fees are a little bit higher, but that's okay. I don't trade much in Net Wealth. That's for my high quality companies. So very little trading in Net Wealth. Okay, promosm. No idea what that means. Just promoing. Silver Lake is currently a cash printing machine with net cash billion in liquid. Yes, that is absolutely true. I had a look at Silver Lake and I was really impressed with our company. And I did not know they were talking about a merger with Red 5. In fact, Silver Lake Resources quarterly results were really impressive. I was highly impressed. And look at the chart. It broke out a few weeks ago above $1.22. It's breaking out again above the next resistance level at $1.35. Chart looks really good for Silver Lake, although same could be said for many gold companies on the ASX. Charts are starting to look really good because of gold. Let's have a look at gold. Oh, bad day today. Well, only down 1%, but fairly volatile today. Now let's have a look at the 5-minute chart with gold. Whoa, rallied and then it fell off. Look at that volume. So when you see increasing volume, get really high volume, when something rallies like that, that's a sign you might see a bit of a drop in the price, and that's exactly what's happened. And the flip side, when share price is falling in the company, and then you see heightened volume, that's a sign the bottom might be reached, and you might see a bit of an increase in the share price. And you can see decreasing volume as it keeps going down, and now I think the bottom has been reached in gold as the volume has really decreased. Anyway, so interesting day on gold. Down, in fact, the overall market was down a fair bit. Nasdaq down 1.66%, but I'll talk about that in my technical update video, which I'll release on Sunday, the 14th of April. I'm in between night shifts tomorrow, so hopefully you won't see or notice that I am fatigued or a little bit tired, we'll say. Okay, so thank you. Someone else who hates daylight savings. Oh, I hate when daylight savings as well. Market open from 9 to 3 is better. Thank you, Map. Yes, maybe we can join forces and change the way all the time the market is open. 9 to 3 is so much better than 10 to 4. Hang in there. We have days like that. You're welcome. Usually the first Appendix 4C has good results. Can't say that of Orthocell. No, yeah, usually that is absolutely true. Usually the first 4C is pretty good, but all the sell was muh. So disappointed that pennies 4C. I wonder if you do a daily technical analysis series. Well, I do a daily ASX rundown, and I do look at a few charts towards the end of that video. That's probably the best I could do. I do a weekly technical analysis series. Could eventually try to do a daily technical analysis series. I could think about doing that in the future. Maybe eventually I will do that. I'm looking at gold on the RSI. So are you talking about relative strength index or whatever it's called? I actually don't use that much. Indicator, relative strength indicator. Or index, yeah, it is index. So I do know some people who use it, but this is gold. I've just included RSI here. So gold looked pretty toppish around about the 8th, 11th of March when gold got to 2,160 and they kept on rising. So it can indicate a bottom, can indicate tops, but not perfectly. I think you have to use RSI with other indicators, in my opinion. Anyway, I don't use RSI because I want simplicity, and I just like to use moving averages and volume and price action. That's me personally. Can you share your trading view defaults or moving average indicators so we can better follow your charts? Thanks for your technical analysis videos. Sure thing. Let's do it. Let's have a look at gold. Okay, so I have two moving average channels, and the way I define these moving average channels is long-term and short-term. So traders, there's different types of traders. There's day traders, short-term traders, long-term traders. In fact, you could view long-term traders as long-term investors. So that's the way I look at the long-term channel. So that's a moving average channel. It's got two moving averages, and it's just shaded in this case green. And there's also a blue line there, which is the 150-day moving average. So that long-term channel, I can just show you here. I think it's that one. Yeah. So the fast moving average is 125 and the other one is 200. So it's talking about between 125 and 200 moving average. So that's my longer term. So that moves, what's the best way to say it? It's more of the longer term trend. So for instance, gold is a long-term uptrend. And it moved into a long-term uptrend probably around about the start of 2023. The other moving average is a shorter term. So you're going to see more volatility in that. You'll see the trend change from uptrend to downtrend way more often. So even though gold has been a long-term uptrend since about the start of 2023, you can see the gold trend changing in the short term much more often. So it changed from uptrend to a downtrend in May 2023, and then moved back into an uptrend, short-term uptrend, in October 2023. So when you see the long-term and short-term both in uptrends, that's usually a good sign. And we've seen that with gold since October, November of last year. And that moving average channel, I believe it's 25 and 50, could be, 25 and 50. And the other thing I've got here is just the candlesticks, one-day candlesticks or weekly candlesticks, and usually I've got volume. But what happened to volume here? Sometimes volume in TradingView just disappears. So let's have a look. We'll go to clarity. That is volume. Another thing I've got here, sometimes I use this, not as often on this channel, is Carl Capolingo's system. So if you do watch his videos, he has the same sort of setup, just different color schemes. So fairly similar to me. And his short-term channel his numbers are like 21 and 33. His longer term is something like 125 or 127 and 211. I'm not sure if you can see what it is exactly. No, he doesn't have it in here. So I did ask him for his SR clouds because I do like to have a look at it on occasion. But you can see here Clarity Pharmaceuticals is in an uptrend, a long-term uptrend, short-term uptrend, a little bit of weakness in the short term, but that's okay. Let's go back to Supply Network. So it's the second company in my daily. So you can just see here, using Carl Capolingo's clouds setup, a long-term uptrend and short term is a little bit more volatile. But if you look at my system, it's subtly different, very subtly different, but it's virtually the same. We'll say virtually the same. And we both got to these indicators our separate ways. I just watched one of his videos. I went, that's fairly similar to mine. And then I just asked for his indicator, and he gave it to me like a week later. Okay, so thank you. Yeah. So hopefully that's helped you. And again, I like simplicity. That's why I use moving averages, volume, and share price action. Some people use MAC, like moving average, MACM, whatever it's called, and RSI. Some people look at different types of signatures, all those fun things. Bollinger Bands, some people who look at Bollinger Bands, Elliott Waves, all those sort of things. Okay. Could you look at TYR? Seems like it's about to bounce off a support level of $1, or also happens to be COVID low. I noticed it because of the spike in volume on the 3rd of April. Love to hear your thoughts. Yes, I can look at Tyro. I actually am a holder of Tyro as a medium to long-term position. Not trading it right now because the chart looks meh. But you're right about $1. So let's have a look at the weekly chart. And one thing I do like to look at is the COVID-19 lows. So the COVID-19 lows were about $1. You're absolutely right. But the share price did fall to 60 cents back in June 2022. That was an overall weakness in the market. A lot of companies did have a low at that point in time. So let's not look at the weekly chart for Tyro because it's in a downtrend on the weekly chart. Now, daily chart looks, but the share price right now is at a really interesting level at 99 cents. I sort of agree with that. Share price is at an interesting level. A bit of a spike in volume on the 3rd of April. It's a one-day spike, so that could have been a cross trade. I prefer increase in volumes over a few days, not just one day, because I'm not sure what that one-day spike was. It could be just a cross trade. Sometimes you will see that in individual companies, a one-day spike in volume. It doesn't really necessarily mean anything. But ignoring the volume, I'm just interested where this share price in this company is right now. So anywhere under $1, so if I put this line at $1, I had this line right there, which was the lows back in June 2023. So we are at a level where I wouldn't be surprised to see the share price in Tyro Payments bounce from here at around $1 at 99 cents. I have traded this company before when the share price did get below $1, by the way. So it is at that level right now. And in fact, for that reason alone, I'm going to put this company on my buy Australia watch list. Doesn't mean I'm going to buy it. Just means I'm going to pay more attention to Tyro Payments. And if we see the company release a really good results or any sort of financial news, I think the share price could break out. But because the share price is a downtrend, share price would have to get above $1.32 for it to be a real breakout because of this little spike in share price when they release their results. A really interesting trading day for Tyro on that day. The results initially look good by the market. Well, the market viewed the results pretty positively initially, and then during the day, share price just sold off. We see that on occasion. Okay, what is the name of the moving average ribbon that you use in TradingView? Sort of talked about that, didn't I? Hopefully, a few moments ago. Not sure it has a ribbon. Not sure it has a name. It's just named MA Ribbon R5.2. And then I just changed some things in it. So what I did was I changed the inputs. So MA Ribbon R5.2. That's the name in TradingView. And then I just changed some of the inputs. Okay, so hopefully that's answered your question. Can you please discuss Jupiter Mines? Also, is ATP coming back, bouncing off of support? Yes, Jupiter Mines is interesting at the moment, given that South 32's mine is offline due to cyclone damage. It's unknown at the moment how long it will take to repair, which could possibly result in supply deficit. Jupiter Mines, I'm assuming this is JPR. I could be completely wrong. Yeah. Oh, is it Jupiter Energy you want or Jupiter Mines? Is another company called Jupiter Mines? There is another company called Jupiter Mines. There's Jupiter Energy and Jupiter Mines. Well, there you go. Please, people, come up with different names. Ooh, chart does look interesting, doesn't it? So we're talking about volume. Look at the volume coming in since about 19th of March. So this might have something to do with South 32. I have no idea what Jupiter Mines does. Market cap of 509.5 million. So I'm assuming they operate in the Tshipi manganese mine in South Africa. There you go. Not much revenue. Scantor revenue. Why is that? But the chart looks pretty good. And the share price is breaking out. It's got over those lows, last highs we saw back in May. So just put a line there. There we go. Well, so yeah. So share price has been in a long-term downtrend. And why do I say that? Look at the long-term moving average ribbon. It's mostly going down. There was a little bit of time here back in April last year where it looked like everything was moving up, but that was false. And it's starting to turn up. So starting to move in the right direction. And last time share price was this high was way back in early 2022. So look at the weekly chart for Jupiter Mines. So long-term downtrend. Although, you take this high here and just draw right there, it gets very close. That's a downtrend and it's broken out. Yeah. So if you have a look at the daily chart, it's broken out. Two ways. That was a breakout of the downtrend. This is a breakout of the resistance level. Things are moving up the right direction for Jupiter Mines. You're absolutely right. It looks pretty good. South 32, I have traded this company in the past. Again, not a company I'd own for the long term. And that's true for most mining companies, possibly except for BHP. BHP could be a company, a mining company, I might want to own for the long term. And this, you could also possibly do a downtrend. Oh, it's getting very close. It's not quite. Oh, you could draw there. But yeah, the chart for South 32, the daily chart looks pretty weak. There it is. There where I bought. I traded some South 32 back in August 2020. And then I sold it somewhere up here. But the chart looks, particularly the daily chart looks pretty ugly for South 32. Share price has rallied the last few weeks though. And what's the last one? ATP, Atlas Pearls. So I took profits. There's me taking profits at 20.5. Has rallied, bounced off. Look where it's bounced off. The long-term moving average ribbon channel, whatever you want to call it. Bounced off that. I'd like to see the share price not get too high now. If we see the share price starting to go down again, that would be a new lower high, which would not be good. And if share price falls below 13 cents again, that would be a new lower low, which means the share price is now in a downtrend. So it's bounced off the long-term channel. The short term looks fairly weak in the short term, but the long-term investors are saying, well, share price has decreased from the mid or low 20s down to 13 cents. There might be some value in this. The short-term traders are saying the share price is in a short-term downtrend, looks fairly weak. So we have seen some strength based off the long-term traders or investors who see some value, and they have rallied the share price, or they are the reason the share price has rallied. And maybe the short-term traders would be getting interested, maybe, but low volume. Not a lot of volume coming in, which is possibly a negative sign for Atlas Pearls. Anyway, still yet to do a video. I'm going to do a grade my trade on Atlas Pearls, and this is going to be fairly positive because I bought at 5.7 cents, sold at 20.5 cents. Anyway, that was never going to be a long-term hold. It's just a trade for me. So thank you. Nice. Again, nice. Lots of comments. Sonic is still below 30. Would you guys still be accumulating here all the time? If market crashes, I think it could drop to $25. So I don't usually follow Sonic Health. It did look weak. Did look weak last time I looked. It still looks weak, yeah. I wouldn't. Down to 27. So share price has just plunged the last 2 to trading days. It looks weak. That little bounce was just a bit of a dead cat bounce, you probably call it. Still looks pretty weak. Sonic Healthcare. Yeah, the weekly chart looks pretty weak as well. I'd probably be out of this. Where will we see? And again, this could be classified as a high quality company that is in some medium term stress right now. So if you look at the weekly chart, beautiful chart from say 2012 all the way through to 2022. Beautiful trend, but that trend has changed. So the sentiment in this company has really shifted to negative. And the last time the share price was this low was way back in 2020. So we're talking about a 4-year low for Sonic Healthcare. Personally, it's how you regard this company. If you think this company is a high quality company, you might start be seeing those value investors coming in and go, oh, there's some good value with this company below $25. That could be the saving grace for Sonic Healthcare, whether the value investors see some value in this company. An update on Zip. Seems to be turning around. Have you bought back in? Well, I am going to stay clear for Zip right now because I do have a medium to longer term position in this company. I'm just going to ride that. The reason I got that medium to longer term position is because instead of completely taking profits, I decided to hang on to some of my profits and just ride it for the long term. And I still think Zip is more of, I wouldn't say Zip. I wouldn't say Zip is a day trader plaything, but there is a fair bit of volatility right now. And we have seen it bounce off the short-term moving average channel twice, which tells me again, there is some traders here playing this. So yeah, bought at 55 cents, sold at $1.25, bought back in at $1.28, then I sold at $1.34. I should put that in. Is it a price label or price note? I forget. $1.34. No, it's the wrong way around. There we go. And I sold at $1.34. Yeah, broke there. It is $1.34. And I think I have to change the color. There it is. Yeah, and I almost bought some Zip at $1.21 on this particular day, 8th of April. Share price fell below $1.20. I missed it by maybe 20 minutes. I actually saw it go to $1.21. I went, oh, I should have actually put a bid in at $1.20 because there was a support level right on $1.19. So people who say technical analysis doesn't work, look at the candlesticks of Zip. When it gets below $1.20, many days you'll see a lot of buying coming in as soon as it gets to that level. And if it broke below $1.19 or $1.18, that would be fairly negative. But yeah, bounced off $1.19 really well. There could have been a really good trade, buy at $1.19 and sell a few days later at almost $1.38. But still, there is a little bit of a resistance level at about $1.38. Yeah, you can see that, $1.38. That's the level I sold out of when it got below that. I want to see it get above $1.38, and then I could take a position at that point, and then I'd like to see a new high. I'd like to see the share price get above $1.60. The chart still looks pretty good, but I'm trading this with way tighter stop losses because of volatility in Zip. I wouldn't be surprised to see the share price of this company just collapse at one point. It could happen any day. It could happen on Monday because the Nasdaq had a big down day. In fact, the American markets had a big down day, and I think the share price of this company could collapse. But at times, Zip doesn't trade with the market. I've noticed that a few times in the past few months. It doesn't trade with the market. The ASX could be down at 1%, and Zip could be up 2 or 3%. Okay, so Zip. Someone else asked Zip here. Chart on Zip. I've already done that, and SPM. Yeah, I'll do SPM in a second, but first, hi Kneppy. It's Kneppy. 2 P's, not 2 E's. KYP trading update. Seems the market missed that one too. What are your thoughts? Okay, yeah, I didn't miss it. I did see it. I just went, meh, did nothing for me. The reason it did nothing for me is I've been following this company. They used to be called CV Check many years ago. I've been following this company for a long time, and this company has always been on the cusp of hitting that inflection point, and it's still on that cusp of hitting that inflection point. I want to see this company get beyond that inflection point, and the market's just not interested in this company. That's the reason why I saw this announcement, a third quarter trading update, ongoing SaaS growth. Yes, it is a good update, but I need to see the market react, and I need to see this company release results where they are going to be increasing their profits, increasing the operating cash flow. I'm not sure they're there just yet. And to drive home the point that the market's just not interested in this company, I need to see the market interested. This is a chart. There's just no interest in this company right now. Yeah, not right now. There's been times where there has been a little bit of interest. Back in late December, you can see increasing volume, but then it just dried up. Share price pulled back. So that could be a good sign. Let's have a look at the weekly chart. And look, actually, to really drive home that this company has always been on the cusp. I started following this company well back in 2016, share price downtrend, and I thought this company sort of made it back in 2017, and since then the share price has gone sideways. There's been periods of time when there's been a bit of interest in this company. 2019 was a good year, but then the share price just pulls back. And then they changed the name from CV Check to Kinatico. I'm not sure when they did that. They might, Market Index might have it when they change the name, not sure. I've got to put their initials, not initials, ticker code first. Kinatico, formerly CV Check. So what you can do, this is what sometimes I do. I'm not sure when they change the name. I just go through the announcements. And CV1, so that's still called CV Check in 2021. I'm looking for a change of name, CV1. Still looking for it. Here we go. Change of company name and ticker code in late 2022. So it's only about 18 months ago. And here we go. So qualitative report, strong revenue growth including SaaS. And if we go to this particular cash flow report, this company has been operating cash flow positive. There it is. Maybe not free cash flow positive, but they've always shown promise, but they've never really taken that step further to really realize their promise. So Kinatico. So at this point in time, I'm just going to wait to see if they can realize that promise. Okay, St. Barbara has, and their chart does look good. So a few things going right for St. Barbara. I want to call it Santa Barbara, like the town. So the long-term chart looks ugly. Share price of this company once was $5 back in 2019. And I think this company has been really volatile. If you even go back even further, yeah, look at that. This is the weekly chart going all the way back to 2006. Ooh, look at that. All you have to do is put a line right there. That's the highs we saw back in 2008, also 2018 and 19. And the lows, I've got a line there as well. So back in 2014, the low for this company was 20 cents. And we've reached that. There you go. And that's how, and this is the reason why I don't have mining companies as long-term investments. But let's have a look at the daily chart. It's looking much better. I'd say this is share price consolidating, going sideways. Last time share price was this high was way back in middle of last year. So we're almost at a 8-month high. And they released some good news. So SBM released something during the week. Was a quality update? Yeah, third quarter production up 33% on the 5th of April. Oh, so that's more than a week ago. And on that particular day, share price rallied 8% and has kept on rallying, helped by gold prices. So share price has rallied from 17.5 cents to 29.5 cents. Chart looks good. Volume looks really good. Really increasing volume. That's a good sign. I'd like to see the share price just pull back a little bit or take a breather. So to get rid of all the profit taking. I don't think there's going to be much resistance moving forward, but there will be a little bit because the share price has been significantly higher in the past. So we'll like you and you. Would appreciate your thoughts on AVA's SPP at 13 cents. I am not taking part in it, considering share price at 13 cents. Yet AVA will be volatile around these prices. I am not going to participate. Your share price is still at 13 cents. Chart looks ugly. This may not solve the problem. The only reason I'm holding AVA Risk Group is just because of some of their forward-looking comments, their projections. If they realize their projections, this company is really cheap. But there are massive questions about whether they can realize those projections. So it's all up in the air, but the chart looks absolutely ugly at this point in time. This is the definition of an ugly chart. Share price in a long-term and short-term downtrends. and this particular cap raising doesn't help. I think even the weekly chart looks pretty bad as well. Yeah, it looks pretty bad. Share price low for this company was about 8 cents back in 2020 during the COVID-19 financial panic. So that would be the price I'll be looking at before I get a little bit interested in AVA Risk Group. And I've held this company for a long time. I held this company all through this period where the share price went from 8 cents to 80 cents. Would have been a 10 bagger at one point. But yeah, unfortunately, not doing much for me at this point in time, AVA Risk Group. I'm not. Doesn't mean just because I'm not participating in the SPP doesn't mean you don't have to. But yeah, the company, I want to see the company become profitable and generate cash in the operations. We'd love to know your thoughts on Dimerix. Okay, if you've been listening to me over the past month or two, you'll know I was trading Dimerix and now I have a longer term position. And the main reason is because of there is potential. Now, no revenue, no cash flow, but they did have a positive results. When was that? 3 months ago? 11th of March. Yeah, 1 month ago. Successfully passes efficacy interim analysis. So they're moving in the right direction. This is sort of, in my mind, I view this company as a mini neuropharmaceuticals. Not what they're doing, but because of their, where is it? Because of their deal with some company. I'm trying to find it. Here it is. Announced as license agreement. They're about 2 or 3 years behind Neuron, maybe even more than that. But they announced this deal. Dimerix to receive $230 million potentially in upfront and milestone payments plus royalties. Have a look and compare Neuron to this. And the reason I say this is a mini Neuron is because Neuron's financial deal was probably better. But again, Neuron is way ahead of Dimerix. So that's the main reason I decided not to trade Dimerix and just have a longer term position. But the chart looks pretty good in terms of the daily chart. And that's the reason I was trading it. Our share price broke out on the news of this deal back in October. Pretty sure that was the deal. Yeah, 5th of October. That was a breakout and a beautiful looking chart. You could have bought on that day or you could have bought in the next 2 months at a similar price. And yeah, you would have done very well. And just look at the share price action. Share price going up, then down, up, and then down. Pulls back to the short-term moving average channel or just below it. So really, really intriguing share price action and really good volume coming in for Dimerix. So I am not trading Dimerix right now, but I do have, and what I did with Dimerix, I traded it, bought it 17.5 cents when it started to climb about here. And then when it rose to, I forget exactly what, it was in the 30s, then I took profits, but instead of banking all my profits, I just put some of my shares aside in Dimerix and just going to hold those shares for who knows how long, maybe 5, 10 years, just to see how this company goes. And one of the reasons I do that also is when you actually do hold shares in a company, you're more likely to follow that company a little bit more closely. So I'm not ruling out trading Dimerix, but I'm going to have this longer term parcel for a long time, hopefully. But I will still trade Dimerix if I see possibilities. And to be honest with you, when the share price pulled back to below 28 cents on the 5th of April, that was a trading possibility. That was over a week ago. So Dimerix, yeah, that's a lot of big construction projects on an. What I should do is look at the video these people are replying on. So someone did reply to my Wagners video. Yes, I'm in a high growth area and thinking of buying a tip truck again and getting into it as well. I put a watch list with a price alert under 90 cents. To be honest with you, Herbert von Sauerkraut Tunter, I, funnily enough, had a similar thought. I was thinking, if the share price pulls back to say 90 cents, I could think about buying this. Share price got to 95 cents during the week, and I was thinking, could I buy some shares at 95 cents? Or maybe I should just wait. The share price pulls back like it has done a few times in the past 5 months. Pulled back to 77 cents in December, pulled back to 85 cents in February. Will we see a net pullback? So I'm just going to be patient with this company. I think there is definitely an argument that there is really good value in Wagners right now. And the chart is okay. Chart's not breaking out, but I have played these scenarios in the past and I've done really well for just trading these companies. Share price looks like they're going sideways, take a position, and they're just being patient. And then the share price just breaks out. You could wait for the breakout, but I prefer just trying to buy these situations or these particular scenarios when the share price takes a little bit of a dip. So again, under 90 cents, I might take a position in Wagners for the longer term. 5GG, since they did the capital raising, it completely destroyed the momentum. Yeah, I actually have been following Pentanet. Trading volume is much higher than before, though. Thanks. Yes, I actually have been following Pentanet. So they had two announcements in regards to relationship with NVIDIA. Share price took off. Management took advantage of the share price increasing and did a capital raising. And see it right here. Share price took off, increased 80% on the 15th of March, and the share price just continues to fall. So I thought the share price might bounce at around about 6 cents. It hasn't. It's fallen to 5.6 cents. And the share price looks like it could fall even to 5 cents, which it was before that announcement with NVIDIA. In fact, the chart looks really weak. There's no buying coming in. You're right, there is increase in volume, but it looks like it's just selling at the moment. Share price just keeps on falling. No support at all. So I'm just going to put or leave Pentanet on my watch list. Now, I believe Pentanet is close to becoming profitable and cash flow positive, I believe. So I do have it on my daily list. I'm going to put it onto my Bye-Bye Australia list. So my daily list is a little bit different than my Bye-Bye Australia list. The daily list, I don't always look at it every single day. The Bye, I will look at that every single day, that watch list. Okay, so yeah, Pentanet looks interesting, but just it looks weak. Too much selling at the moment. Oh, SKS, chart looks good. Yes, yes, yes. So this is the company, the only company whose CEO reached out to me. The only company whose CEO, other non-CEOs of companies, members, employees have reached out to me, but SKS is the only company whose CEO has reached out to me. And I did a video because he did that. And you're right. The chart looks absolutely spectacular right now. Up to 59 cents. Share price increased 15.8% on the 10th of April. I've traded this company in the past. And the reason I traded it is whenever I saw the share price get to below 15 cents, I thought this company was really good value. But then I sold it when the share price increased to 50% more than I bought in. So when it got to about 22, 23 cents, I sold. And fortunately, I didn't do it this time because that would be annoying to see the share price continue on the run. Markup $61 million. Good volume coming in. Look at the volume coming in. I'm not sure what's driving SKS right now. The financials are good. Okay. Let's say okay. I wouldn't classify this company as a quasi high quality company. Definitely not there yet. No price sensitive announcements. Last one was the half year reports. So let's have a look at the half year reports. So I think the market is maybe getting a little bit ahead of itself right now. So revenue 53.6 million, up 22%, profit of 1.8 million. So still low profits for this company. So there's a few companies, small cap companies in this realm, not this sector, but this realm where I think they do look really attractive just based on valuation. SKS Technologies was one of those companies, but I think the market is getting a little bit ahead of itself right now. Chart looks really good, but I wouldn't be surprised to see chart pull back right now. I think it's just getting ahead of itself right now. Some good volume coming in as well. But you're right, SKS Technologies looks really good. Okay. I would like to watch your videos, but they are too long. Please make them short and sweet, like 10 minutes. I did my rundown video of 20 minutes the other day. I sort of do like 20 minutes. Maybe not 10 minutes, but 20 minutes with timestamps. That way you can just go to your anything you want to watch. You can just go straight to it. Now, there have been replies to this. You aren't going to get anywhere if you don't have patience. 6 thumbs up, including me. Really appreciate the way he puts in timestamps. It allows me to jump to what I'm interested in. thank you for sort of talking about what I said. Make time to listen to Kneppy. You will learn a lot about everything. I'm not sure about that. I do. Here's an interesting story. So many years ago, probably about 13 years ago, when I was working for the Bureau in a section where we were doing the coastal waters forecast. So to do the coastal waters, so if you're a boatie, you'd be looking at my forecast back 13 years ago. And we got some feedback. So in a particular week, we had some feedback from one boatie said our forecasts were too high. But another boatie said our forecasts were too low in the same area. And that made me think, well, if some people think our forecasts were the winds were too high and our forecast winds were too low, if you average it out, more than likely our forecasts are spot on. It makes me think of the experiment they did well over 100 years ago. So you remember those games where people guessed the amount of jelly beans in a jar or coins in a jar? So over 100 years ago, the game was guess the weight of the ox. And what this guy decided to do was just average out all the guesses to see how accurate the group was as a whole. He thought that the group, being probably stupid in terms of knowing what the weight of an ox would be wildly wrong. But instead, the results, the average of the group was amazingly accurate within 1 pound of the actual weight of the ox. And I'm pretty sure they've done further research on this, that the group average, when you're guessing something, is highly accurate. So if someone says the videos are too long, someone else says the videos are too short, not sure everyone's saying that, but we are getting comments that, maybe not quite as long. Preferably, I like these videos to be 20 minutes. I do ramble on, just like I prefer this particular video to be less than 1 hour. So look for videos to be about 20 minutes. And the reason I want the videos to be 20 minutes, I want to do standalone videos as well. And because these videos are like 40, 50 minutes, I just don't feel like doing or recording another video. So thank you for your feedback. I do appreciate feedback as well. IODM, Credit Clear, maybe you could talk about how Earlypay isn't doing well. Funny enough, on Credit Clear, I was listening to Ausbiz The Core today, and Credit Clear did pop up. It was Adam Dawes and June Lee Bean, whatever her name is, and it was pretty obvious they knew nothing about Credit Clear because they were equating Credit Clear with payments for consumers and comparing Credit Clear to Zip. And that just made me realize they didn't know anything about Credit Clear. And they actually did say they knew nothing about Credit Clear. They both put cells on it, too small. Credit Clear looks interesting just based off the chart. I'm not, I would only trade at this point in time. Oh, share price has dipped towards the support level at 24 cents. That's interesting in itself, but it really hasn't taken off. And I haven't seen an increase in volume. I'd like to see some increase in volume since the last spike. I did mention IODM, and I think IODM does accounts payable. Well, Credit Clear does accounts receivable. They're sort of in the same space. But Earlypay, I have no idea about Earlypay. So I'm assuming this is payments plan company. Let's have a look. Provision of financial management and payroll services. It operates through the invoice finance, equipment finance segment. So completely different than what I thought. The invoice finance segment consists of invoice finance so I haven't done any research on Earlypay at all, unlike Credit Clear. Done a little bit more research on that company. Very little research on IODM and no research on Earlypay. So this is just based on the chart. Okay, chart doesn't look spectacular, but share price is going sideways. It's been going sideways for over a year. You can see this little dip in the share. Well, not little. Share price fell 38% on the 23rd of December, 2022. That wasn't quite the bottom, but that was near the bottom. Share price rallied in August last year. Nice little rally. No strength in that rally, although there was a little bit of volume. But I'd say the share price is going sideways for Earlypay. Definitely, there is resistance right there. That's pretty obvious in my mind at 26 cents. And I'd say you could probably draw another line sort of around there. And the share price is right on that level right now. Share price has dipped below that on occasion, but only briefly. But that's at 17 cents. So at this point in time, you could say that Earlypay is trading in a range between about 17 cents and 26 cents. And right now, it's at 18 cents, right on the bottom of the range. Look at the volume coming in as well. Is that a sign? Is that a sign there's interest in Earlypay at these levels? Maybe. Let's have a look at the announcements of Earlypay. Do they release an Appendix 4C? I'd assume so. They're doing a buyback. No, they don't. There was no Appendix 4C in January. Let's have a look at their financial results and outlook. Revenue of 18.2 million, down. Profit of 2 million. Company's profitable. This company's profitable. Okay, I should do more research on Earlypay just based off this. So thank you. So the whole point of me doing these videos is to share ideas. And sometimes you share ideas with me or you give me ideas. No, I'm not necessarily saying Earlypay is a buy, but the chart looks interesting, just the fact that it's consolidating and trading in a range. And if the company is profitable, I am always going to have a further look. So thank you, Ryan Hillman, about Earlypay. So you're saying it's not doing well. Are you talking about the business or the chart? I'd say that the chart is, it could look interesting if it breaks out. And if a company's profitable, however, the one thing, negative thing was revenue was dropping. That would be a red flag for me. Brilliant. Not sure what you're talking about, but thank you. I like the long videos. Ditto. Okay. See, because some people like long, some people like short. I'm liking these early videos. Early videos? Oh, you're talking about 3 p.m. Yeah. Thank you, Nice. Another comment from Nice. Few examples of buying at low value with momentum from your videos. Findy, Alice Pearls, Zip Electro Optics. Not sure about Findy because I've owned that for a long time. That was just luck on my part. Definitely Atlas Pearls. Zip, yeah, bought it at 55 cents. Not the complete bottom or maybe value, but I definitely saw the sentiment in that company changing. So when I initially bought 55, definitely was nowhere near the bottom, but I just saw the momentum just shifting. It was shifting rapidly and the sentiment shifting as well. And this is where I use a short-term moving average channel, not the long-term moving average channel. So this was just short-term. And both are in uptrends right now. And EOS, that was another case where definitely sentiment shifted. Both, or shifting again maybe. What happened with EOS recently? Something happened. They repaid something, didn't they? Yeah. EOS repays second debt installment on schedule. That's really good. It's good news. But I'm still owning Electro Optics for the long term. They're doing a capital raising. What was the capital raising price? At $1.70. So share price is right on that level right now. Okay. So thank you. Nice. Enjoying the show. What happened with Paladin? They're consolidating, I believe. Share consolidation. Yeah. So Paladin Energy, LTD, def set, PDNDA. So you won't see any Paladin in here, the old ticker code. Got to spell it right. PDN, because they're undergoing on consolidation. If we go to market index, you might be able to see that. Now, even in here, you don't have it. So they might have announcements here. Yeah, there we are. Share consolidation in companies ASX code. Are they changing the code too? Oh, no. They're not. It's just a temporary change. Yeah, that's what's happening. Yeah, there we go. When normal trading commences on the 22nd of April, and unless otherwise notified, the company's ASX code will then revert to PDN. This is what sometimes happens when a company's shares are consolidated, 10-for-1 basis. So is this the consolidated share price of Paladin? I'm not sure why they're doing that. Did they really need to do it? Was the shares on issue were just too high? I don't know. Let's have a look at Paladin again. Again, there's nothing here. Ordinary shares, 2.98 billion, not that high. I'm assuming that's pre-consolidation. So post-consolidation, this company's going to have 20 or 30 million shares on issue. Why are they doing that? I'm not sure. Market cap 45.8 billion. I'm sure that's wrong as well. Okay, so that's what's happening with Paladin. They're doing a share consolidation. So you won't find the T code. the PDN ticker code. Now, there is an opportunity for new investors to buy Whitehaven at a discount for the next few months. Okay. Possibly. I sort of might agree with you. Possibly. Share price has been quite volatile. Oh, look at that. Continues to be volatile. So no uptrend or downtrend. There could be some value. But at this point in time, I'm not seeing any trend in the share price. Sentiment, we'll say, is neutral in Whitehaven. And you could absolutely be right. There might be some pretty good discount in this company. But I'm going to say that I would say over the next few decades, there's always going to be, or coal companies will always be at a discount to their real value. And the main reason behind that is ESG reasons. So even though it looks like there could be some good value in coal companies right now, including Whitehaven, I think that's there for a reason. Okay. Been watching EZZ for a while, might be time to buy. I'm nervous about Cettire with a global outlook and whether demand for discretionary luxury goods will be strong if there is a downturn. Macroeconomic outlooks are difficult to understand. And Panda Magic Hero is probably right. There are generally no downturns for consumers who can afford to purchase goods from Cettire. That's actually really true. That's the reason Cettire is doing really good. I'm very, it's really weird about Cettire's, when they released a market update, the market reaction was really weird in my opinion. That's a fair point. I was mainly thinking about China, where Cettire are focusing on full growth, but your point applies there too. I'll still wait and watch. Yeah, EZZ, I'll just have a quick look at this chart. Chart looks pretty good. Now, EZZ also is focusing on China as well. I just wish countries would not completely focus on China. I think A2 milk is a big problem with A2 milk. They are so obsessed with China. Why not become obsessed with other countries? Okay, Domino's had a bad day because they did an investor presentation day. Okay, and I'd say that their investor presentation was not price sensitive. Let's have a look. There it is. A strategy day presentation, not marked price sensitive. That's why I missed it. Yeah, that's probably a good explanation, Ryan Hillman. I'd say you're 100% right. I'm going to have a look at that presentation because you've mentioned it to me. I had no idea they released that. Welcome to the party, mate. Been on this for over 2 years. Oh, Bellevue Gold. BGL. Is it BGL? Or is it BGL or BLG? BGL. Yeah. Oh, the chart looks pretty good. All gold companies chart look pretty good right now, but Bellevue Gold looks really interesting. I think that might be my favorite gold play. Maybe. And the main reason behind that is just the management. And Panda Magic Hero. The last comment written 36 minutes ago. Hey, mate, can you please give your opinion on whether you think Brickworks and Block are high quality companies? Thank you. I can do that. In fact, I'm just going to go to the dashboard, see if there's any other comments, because that would have been more than 36 minutes ago. Yeah. Okay. Brickworks and Block. Brickworks and Block. Okay. I'm pretty sure I've done some videos on Brickworks. In fact, I can actually tell you. Brick. I'm pretty sure I've done more videos than that. What are they doing? Maybe it's not. BKW. Anyway, I'm pretty sure I've done videos on Brickworks or standalone videos. I'm pretty sure. And I'm trying to remember what I thought about Brickworks. Now, typically, what I would do is if I don't know anything about a company, the first thing I would do was go to some sort of platform like Ticker, just put in the code and then look at the revenue growth, return on equity, return on invested capital, return on capital employed, earnings per share growth, that sort of thing, and then determine whether the company might be high quality or low quality. Brickworks is a little bit different because of their relationship with WH Soul Pattinson. With Brickworks, I'm pretty sure the dividends have increased for many, many years in a row. And when I'm unsure about the quality of the company, the last thing maybe not the last thing, but the best thing to look at is the chart. So if you look at the monthly chart for this company, you get a good indication on whether this company might be high quality. And this is the chart of a high quality company. Share price increasing over time from the bottom left to the top right. And whenever you see a bit of a dip, in fact, I have a long-term uptrend here from all the way back from 1998. And whenever the share price gets to this long-term uptrend, it bounces off it. So you could have bought Brickworks at about $10 in 2011, bounced off in 2017, bounced off it during the COVID-19 financial panic, got quite close in June 2022, and is well off it right now. In fact, share price is $27, and the long-term uptrend is $16. So I would say that Brickworks is probably a high-quality company in the making. Definitely, if it's not, it's quasi-high quality, very close to being high quality. But whether there's any value in Brickworks right now is to be determined. Dividend yield's fairly low, 2.44%. Doesn't have any price earnings ratio here, which probably means they did not declare a profit in the last half year. And that's the other thing. This company has a lot of property, and that property is going to be revalued or devalued, that sort of thing, and that could manipulate the profits of the company. So Brickworks is a hard one for me to really analyze, just like Washington Hayes Soul Pattinson. There are things to like about Brickworks, and yeah, the chart looks pretty good. So over the long term, I think you probably won't do bad with Brickworks, but I'll try to buy it when the valuation is good or when you see a bit of a dip in the chart. So if you look at the long-term chart, particularly if the share price falls between the long-term and the short-term moving average channels here. So if it moves towards this blue line, I would become really interested. That blue line is now at $18. Or if the share price falls below $23, I'd become interested in taking a longer-term position in Brickworks. Block. No, I would not declare Block as high quality. The main reason is, look at the chart. Well, Block hasn't been on the ASX too long. So I'm going to defer to Block, the American, here it is, SQ on the New York Stock Exchange. If we look at the weekly chart first, this is not the definition. Oh, look at that. It bounced off the COVID-19 lows back in October 2023. That could have been a good time to buy. I don't follow this company all too hard. But see, if you looked at this company right there, you would say, oh, this has the hallmarks of a high-quality company, but it's not profitable. Pretty sure it's not profitable. Market cap 47 million. Now, if you look at revenue growth, yeah, there's signs that this company is high quality. Revenue has been growing consistently, but the company has not been profitable, barely profitable. Maybe not a lot of cash flow. Operating cash flow positive last few years, but $100 million. So it needs to show me, and I'd say even the return equity and that sort of thing is fairly low. So this is the sort of company where you need faith in management that they're going to grow the company over the long term. And the valuation is the hard thing about this company. That's the problem with these companies, is knowing what the true value. That's why the share price can be really volatile, because you get wildly different valuations of these companies because it's hard to know what the true value of this company is. Share price of Block was $280 back in late 2021, got down to $40. So it went from $280 to $40 because these sort of companies are really hard to value. And I'd more than likely just trade these companies for now. Anyway, is that it? Oh, someone did. No, I was going to say someone has put a new comment. Okay, no, they didn't. Sorry, Panda Magic, you also wrote something else. Can you give me your opinion on VIT? I'm unfortunately a holder and I feel like I've done my dough. I wouldn't say that. I wouldn't say you've done your dough on Vitura. I definitely wouldn't say that at all. Now, the share price has gone backwards, and the main reason Vitura share price has gone backwards, I can say it, a lot of interest in this company back in late 2022. Share price went to $1.04. Wow. Share price is now 17.5 cents. The main reason is because of margins and competition, if I remember correctly. Company's still profitable, by the way. Company is still profitable. But margins, I'd say the gross margins have decreased. And the reason I say gross margins have decreased, or even just the net margins, is because of increased competition. They might have mentioned that. Let's have a look at their presentation. Just wait for the... they might have mentioned it. Let's have a look. Yeah, in fact, they have. Page 3. Competition, pricing, and margins. Increased competition was experienced in the medical or medicinal cannabis market in Australia first half. With these competitive dynamics, the estimated average price to patient, sales price of medicinal cannabis product, has decreased from $130 to $110. Rebates to pharmacies are now commonplace in the market. Costs, increased cost pressures in products and overheads. So all this combined, decreased prices, decreased margins. This company does not have a moat, does not have a competitive advantage. But look at the first half financial metrics. Revenue of $60 million, EBITDA positive, profit after tax positive, cash at bank positive. Certainly haven't done your dough. This is a real business. It's just increased competition, increase or decrease in margins has really negatively affected this company. Now, possibly with increased competition, decrease in margins, that should be maybe put pressure on some of their competitors. And maybe some of their competitors will go out of the business, will go away of the dodo, and that will decrease competition and increase the margins in Vitura. So the way to look at this sort of company is just like a mining company. It's cyclical. Times can be good, times then go bad because of increase and decrease in competition and margin. So I definitely don't think you have done your dough. Would I hold it, Vitura, right now? Probably not. Share price looks ugly, or the chart looks ugly. Markup is 109 million. Dividend, do they still have a dividend? Not sure about that. Price earnings ratio 11.5. It's probably last 12 months. So if you look at this, nice growth in revenue over the last few years, but that's under pressure because of increase in, you can see that in the last 3.5 years. Revenue's just going sideways and profits fallen from 7.7 million in a half year to 6.1 to 3.3. That's the effect of increased competition. It affects margins. That's why high quality companies have moats and are able to maintain their margins. This is not a high quality company because of this very thing. That's all I got for today's video. If you want any questions asked, any replies commented upon, or comments replied upon, just leave it in any comment of any video from now, and I will reply to that particular video and answer your questions. Okay, so get away. Do it now. Well, don't have to listen to me. You can do whatever you want. Anyway, that's it for today's video. Have a good day. And don't forget, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.